Motherson Sumi Systems and Motherson Sumi Wiring India's financial performance in Q4 FY22 were a mixed bag. Demand led to the improvement in the top line, but cost inflation impacted operating profitability. Since this is the first quarter post the transition into a new structure, there have been multiple adjustments and hence numbers are not properly comparable. Consolidated SAMIL posted a 4.4% QOQ growth in its top line, driven by 22.9% revenue growth in standalone business and 13.8% growth in MSWIL, which is the India wiring harness business. Its PKC business also witnessed a QOQ growth of 9.6% in its top line, driven by strong demand for trucks in North America and China. On the back of strong operating leverage, standalone business and MSWIL witnessed an expansion of 750 basis points and 90 basis points in their EBITDA margin respectively. Standalone business's margin was boosted by related party income received from MSWIL pertaining to 9 months FY22 but accounted in Q4 FY22. Its SMP business, however, witnessed an EBITDA margin contraction of 230 basis points due to cost inflation. Coming to the domestic industry and outlook, the company is getting hit by the constraints in the supply of electronic control units owing to the non-availability of semiconductors. The management, however, has indicated that supply constraints are easing and that they can see significant improvement from September 2022. Also, MC Pro believes that a high pent-up demand post-COVID, preference for personal mobility, and first-time buyers would continue to trigger a strong demand for cars. Other factors that are expected to lift demand are easy financing and pick up in economic activities with borders opening up. With good agricultural production and expectations of a normal monsoon, the management expects the sentiment to remain positive in rural areas as well. MSSL, being one of the leading suppliers of car components, is likely to be a major beneficiary of these positive trends and is well placed to garner a bulk of the increased demand. On the international front, the situation in the automobile market has improved significantly, with demand for cars picking up across many geographies. The management has indicated that the demand for Class 8 trucks in North America continues to remain strong. These trucks contribute over 45% to PKC's revenues. PKC is also focused on the truck market in China, which too is showing a strong momentum. The management has indicated that there has been a strong order inflow for electric vehicles. In fact, Samvardhana Motherson Automotive Systems Group BV, a group company's order book, now has 27% orders from EV manufacturers. It is also supplying to 4 of the top 5 EV models being sold globally. Coming to the challenges, like any other manufacturer, the company is also not immune to cost inflation, which is eating into its profitability. Apart from metal costs, high energy costs, especially in Europe, are impacting its margins. The company has been trying hard to pass on the rise in costs to its customers. As per the sum of the parts or SOTP valuation, SAMIL, the currently listed entity, is expected to have a fair value of 162 rupees a share, offering a 35.8% upside. And based on FY24 estimated earnings and 35 times price to earnings multiple, the fair value of MSWIL is 87 rupees, which is 36% higher than the current market price of 64.2. Among the key risks, any slowdown in demand, both in the domestic and the global markets, will impact the performance of the company. Any adverse movement in raw material prices will also hurt MSSL's profitability.